Good evening, everybody, and welcome to another edition of Live Market Analysis. It is a pleasure to be with you, as it is always on Monday evenings, to chat markets. A little bit going on at the moment, don't you think? And obviously we'll get to all of that and more after we talk about the disclaimer, which says that everything we're going to discuss is general in nature. It has not taken into account your personal financial circumstances, objectives, or particular needs. So before acting upon any of this general information, you should consider it carefully or seek the help of a financial professional to determine its appropriateness for you. Apart from that, it's important to remember that trading and investing is risky. You will lose money at some stage. That's inevitable. And ultimately, it's you, not I, who's responsible for everything that you choose to do. The agenda for today evening, that's a combination of tonight and this evening. I've just coined a new time of the day, ladies and gentlemen. Tonight evening is to talk about what you want to talk about in terms of charts that we can look at. Let's look at commodity charts. What is the price of oil doing? What's the price of gold doing? Price of silver doing? But you might have some stocks. If you've got a stock, give me the ticker. Give me the market it trades in. So if it's a New York stock, let me know. If it's a Toronto stock, let me know. But there might be more than one ticker in different countries. Don't just give me XXX and expect me to know where it is. Type of setup. Is it a continuation setup, turnaround setup, or an aggressive setup? Are we adding, reducing, or maintaining risk? And what key levels are you watching? That'll let me know that you know what the hell it is you're talking about. Okay, let's head over to the Amy broker screen, and it is coming, I promise. There it is. We're going to start off with our portfolio management. That one, the portfolio management model for the Nasdaq. Actually, I should have gone to the browser window. I just went to the wrong browser window. That's so annoying. Let me. Oh God. Anyway, it doesn't matter. I know this goes to YouTube, doesn't it? But we don't care on Monday nights. We're not so fancy here. I don't do any post-production or anything like that. But what I want to do is to change that, because it'll default to whatever it's on when I start the preso. When I start the preso, obviously it is on ULOT. So you can see ULOT there. And if I can find the damn thing. That's a freaking Amy broker. Oh, this is going to make sense very, very soon, I promise. That's not it. Videos, notepad. Oh, there it is. Market Watch. Holy moly. Okay. It's been that sort of a day. I just wanted to show you what the futures are doing. That's all. The Nasdaq Composite futures down 1.37%. So if you're not sure where to find them on a rolling basis, 24/7, pretty much here is Market Watch. MarketWatch.com. I've been using Market Watch since the early 1990s. It is one of the longest, if not the longest internet market sources of information, now owned by Rupert Murdoch. So you can head over to here, futures. All right, and you can see Dow futures down about 1%, S&P futures down about 1%, and Nasdaq futures being a more risk-on market, down about 1.4%, and gold and silver we get from TradingView. That's why I wanted to head over there. To put this chart into perspective, because it's going to open down. We don't know where it's going to close, but we do know it's going to open down, 250 points. So if that low there is 22.56 and the close was 22.6, it's going to open around that low, give or take somewhere between that low there and the remnant of that low there, which is, I'm not sure, it's going back a bit further, that one there perhaps, or even that one there, I don't know. Anyway, there's a couple of lows around that level. It's not really relevant. The point is, it's going to be on the knocker in terms of some pretty serious historical demand zones, points of demand. There were substantial amounts of buying there in the past. Will there be substantial amounts of buying there tonight? Would really the Nasdaq kind of needs it? Is this going to be the straw that breaks the camel's back? And the camel's back is right here. It's got 1, 2, maybe you could call it 3 humps. And below 22.56 and we're 22.256, and we're talking about a close below. We're talking about a black candle that looks like this, and I still to this day cannot understand how the Nasdaq got away with that candle and that candle there, and were never headed. I can only assume it was the plunge protection team. And here again, will the plunge protection team have the comps back tonight? I think they will. I think they're a better than not chance. If we look at what happened in the ASX 200, I'd say don't count it out. Not that it matters to us, right? What this tells us with this, we've called it a camel. We could call it the zebra with the black, white, black, white, black, white. We could call it the caterpillar, just crawling along here and not doing a whole lot. This has forced me, you can do whatever you want, to really pare back my portfolio risk. So we're not picking individual trades. We're saying of the trades that we do pick, stacking them up, R plus R plus R plus R, how much of our total portfolio can there be? And we're at 0.5 here. So 50% invested, 50% cash. And I couldn't possibly suggest a better place to be. Some people may be more conservative and they may want to go to the next level. And that would be, for me, on a close beneath 22256. So that would be a 1/3 risk position. And I don't think we even need to talk about the other one, which is moving back to a 2/3 risk position. Now, here is the conundrum. You look at that chart, makes a lot of sense. This chart maybe makes less sense because this is 100% FRP. And today's candle was perfectly demonstrative of the underlying inherent demand side nature that we're experiencing here. Now, it wasn't comprehensive, it wasn't widespread. If we look at some of these indices, we can see consumer discretionary, one of the nots. Energy, one of the haves, for obvious reasons. Financials, one of the nots, and that's largely to do with moves in US bank stocks on Friday. Gold, obviously, one of the haves. Healthcare, one of the nots. Technology, one of the nots. Materials and resources, definitely the haves. Property, generally a not there. Staples, that's the Woolworths move. A have, neither here nor there. That's the Telstra. That's all Telstra, that move. And utilities looks okay. A bit of an energy flavour there on utilities, of course. So it's not a broad-based move. We've talked about the lack of market breadth. And in fact, also on, I want to say Thursday or Friday, I brought to your attention, I probably should have done this earlier, but just the equal weight index, and you can see if we stop using each stock's market capitalisation to determine their influence on the market, and we give every stock in the ASX 200 an equal weighting, therefore, in many ways, what is the average ASX 200 stock doing? We get a far more different picture. One, that is possibly more like the composite, probably not as bad, but also one which I think, if we're being honest with ourselves, would not be more than 50-50 risk as well. So whilst you're FRP, it's clear that the risk you are taking, let's face it, is coming from a very small number of sectors. And if you look at the ChartWatch ASX Scans watch list, which I prepare for you every night, we are seeing a larger number of energy, gold, and resources plays. So just understand there's a little bit of concentration in there as well. You're FRP, but you're really FRP in a very specific set of sectors that are taking advantage of what's happening right now. Let's say tomorrow we have, Iran just rolls over and says we're switching to a democracy, a pro-US based democracy, and we love Israel. We think they're brilliant, and it all evaporates overnight. Then that trade could come unstuck. If people got the crying face emojis, I don't think it's going to happen. Hey, the future is unknown. Anything is possible. Let us move on. Actually, we've got a few other things here today. I did do the lithium, haven't I? Done lithium. We'll head down there, have a look at it while we're here. In fact, we might head to the base metals first and have a look at how the events of the last 72 hours are impacting base metals generally. And this is generally wartime stuff. So there's nothing unusual here with aluminium rising modestly, copper rising back up. Generally, war is good for commodity prices. Nickel, lead, tin, and zinc. Maybe not zinc, but otherwise quite good. Lithium carbonate had a bit of a dodgy old day today. That's not what I wanted. That's what I wanted. And a little bit concerned. In fact, we'll head over here because we can see that it is in a decent zone there. If we zoom back, you'll see what's formed the zone. So an area where there was demand in the past, but it's pretty ancient. But it's still pegging some supply here. And we're two goes now, aren't we? That sort of 180, 190 zone there, big black candle, and just reinforcing it. Look, here's the level here, and beneath this, then I'd start to, say things about it. But above that, it's still looking trend here and trend here. Okay. Interesting. And there've been some quote unquote fundamental developments along the way. Zimbabwe obviously is the obvious one. And I'd say that would have been in the market before the announcement, and that's helping push it back up and put some pressure on the thesis that could have been a cycle high. And we're getting a bit of that when we get to silver. We'll see that idea of things that probably could have been cycle highs not being cycle highs. Looking at spodumene, Australian spodumene concentrate, then we're seeing still a very, very strong trend there. So that's encouraging. And always worth looking at NdPr, the rare earths. They're still in a pretty decent trend. I know it's down a little bit today. Let's head over to the trading view screen and we'll finish our whip around the grounds. Probably the most interesting, the most important whip around the grounds I think we've done in the history of live market analysis, starting off with silver and keeping with that theme of cycle highs. And, I called it the day after the candle happened. But this is starting to look half decent again. And we kind of intimated that last week. But there's still plenty of work to do. I still think there's lots of damage, lots of psychology about that. But having, this is looking good again. Let me just say that. So if there is one high, one species-ending type of candle that could possibly be defied, and it's taken a pretty decent little disagreement, let's call it, in the Middle East to facilitate it, then it could be that one. And gold looking much better, but it looked better from the start. We knew that. We said that almost immediately afterwards that wasn't the species in the event. It didn't even really challenge the short-term uptrend ribbon, and that has pretty much lived up to that expectation. Having a look at some of the other metals there. Copper, muted response. London slightly better, obviously. Iron ore looks okay. Well, it's not okay. It just doesn't look terrible anymore. Uranium came off on Friday. It'd be interesting to see what happens tonight. I don't know what the permutations are with the uranium price. Not I really care, but we'll just follow the trends there as we usually do. And then we'll head over to US crude oil, which is must have less of an impact here, or the events must have less of an impact here because we're talking about oil that's being produced mainly in the US compared to the oil that is produced in the North Sea, but also it tends to be a bit of a benchmark for any of those Middle East crude oils as well. So it's moved further. I think this is a bit of an unimpressive move so far, and you'd be silly to say that that's the end of it. But I mean, is that? I know it's all over the news, isn't it? It is all over the news. Man, the news is so dumb. Let's face it. Does anybody disagree? So no, Carl. The news is written and spoken by really, really intelligent people. So they're going to tell us, obviously, that it's the end of the freaking world, that oil has spiked through the roof. But it's I mean, it's really not up that much, is it? What does a proper spike look like? Let's go back here to nobody agreed with me on the news thing, by the way. So I guess we've got a bunch of either journalists out there or people who are married to journalists or have journalists in the family. I'm a journalist too, don't forget. So it's like I'm Italian too, so I can say, I can make the Italian jokes. I'm a journalist, so I can make journalist jokes. Let's go to, that was 2022. That's a proper spike. It wasn't even a war in the Middle East, by the way. And then we can go back to some decent wars in the Middle East. So don't expect me to remember them all. And I don't want to make light of it, but we probably can't, between us, remember them all. I can't even remember what caused that one before the GFC. I think that was just the miracle of Chinese economic growth, to be fair. And the natural and normal one, I guess we have to go back to 9/11. And hardly even a blip there. So Yeah, don't believe the hype is all I'm trying to say. Don't believe the hype. Believe the charts. How about we go with that instead? Just while we're here, just for completeness, we're going to look at some of the coal contracts, and nothing doing there on Newcastle coal, and actually pull back on the metallurgical coal in line with the iron ore price. So, look, a constructive move in Brent crude, but I wouldn't be buy. I wouldn't even buy that chart, but I wouldn't be buying on the basis that this is your big trade of 2026. Okay, let's have a look at the bonds now, because I think this is a far more interesting market than what's happening in crude oil. Is risk. How are investors feeling about risk? Aussie twos, obviously, we're getting fairly hawkish tones from central bankers. We're getting fairly hawkish types of inflation data coming out, so that's hanging up and about there, but easing off a little, and any ease in that will help the Aussie market, I put to you. Heading over to the Japanese twos, which are stagnating, and that's not bad for equities. Remember, the whole reason why we're here is to look for red flags in equities, and we're looking at weekly charts, but it doesn't matter. We're getting largely the same information. Obviously, these are coming down because of Fed cuts. They could be coming down because people are taking money out of, so shorter-term traders are taking money out of risky Nasdaq stocks, and they're buying bonds. So we know when the prices of bonds go up, the yields of the bonds come down. Okay, so potentially this is signifying a bit of Fed expectation and a bit of flight to quality. And I do believe that's what's happening here on the 10s and the 30s, which have completely reversed course from you can't own US assets to, well, when the what is hitting the fan, or it's plunging into cities, downtown cities, then there's nothing better than US treasuries, is there? Ladies and gentlemen, I put to you that's still the case. Is there anything sinister in those charts that's concerning me at this stage? If we were seeing those pictures with some really bad US economic data, yes, I'd be very, very concerned about the stock market, but I'm not so sure that's what it is. What we didn't do, and we really should do, and I could just do it here, is the whip around the grounds for the international indices. And these will be trading now, so this is super interesting. So we saw a complete zero reaction from Australia. If anything, it was a bullish reaction, and we are seeing a very muted response here for the French market. The DAX has moved. It has moved, but it seems to be rallying off that low, so that there's some response there. Eurostoxx 50 is coming off, but look at the base. Look at the base on these, and the FTSE. I think I might have gone the other way around there. The FTSE 100. Look at the base, and then the Eurostoxx 50. Same. Look at the base anyway. In China today, I actually haven't seen this because it's a public holiday over here in WA, so I wasn't at my desk today. Do you think the Chinese care about what's happening in the Middle East? Not too fussed by it, it seems. We're looking at through some of these have pulled back, but it doesn't look like what you heard about on the news. It's so funny today, isn't it? That you see some of the imagery they use, and I'm sure that when they got to the stock market report and they saw that the stock market was up today, they would have been just so disappointed. Because they had written out, I'm sure in advance, the Australian share market shed billions today as investors. What a disappointment. Okay, let's head over to back to here, and we better stop saying bad things about journalists. Yes. I'm trying to think where I'm going. I'm going over here. Here we go. I have to stop. I was going to say, I particularly love the ones that get themselves on the scene. Don't you love the ones that are on the scene? The burglary happened literally about 6 hours ago. The last policeman is literally, sweeping the evidence off the road, and they're still on the scene. But that's important, isn't it? Because it shows they're at the cutting edge of journalism. Let's do some stocks. Don't worry, no Duolingo tonight. Let's go to Love the Sound tonight, says Adonis. We're going to do your US stocks at the end. I've got some offline requests. Actually, want to do those. FRS. This one here is from Peter. I don't think Peter gave me much instruction. He just gave me 2 ticker codes. So Peter, pull your finger out and let me know what you really think. I think the last time we looked at it, we might have said something like, if we see a big white candle, it's probably good. We also probably said if it closes beneath that trough low, it's probably not good. And we don't know what's going to happen next, but it looks like we got one of those candles, didn't we? In fact, we almost got the exact candle, which means total demand side control. There are people with cash and there are people with Forrestania Resources shares. The people who have cash are falling over themselves to buy Forrestania Resources shares because they think it's pretty good. And the people with Forrestania Resources shares don't want to sell them unless they get more and more money. Unless the people with cash, please give me something. Look, will you take 72? Will you take 72? Look, maybe 73, maybe 75. But what's happening with the volume, actually, that's on that point? There's a little bit of trading activity here. They're all above average. So you can't say there's a supply side vacuum. There isn't. There's probably a lot of traders in here. And if anybody is trading in this one, you've probably seen the walls and walls of stock on either side. Look, looks like a bit of a trading bonanza. But ultimately, we can defer to the price action and say that, yes, there is very strong demand side motivation. And on that basis, there's really nothing else to do here. But right on the screen, FRP, if I had it, it'd be FRP or equals R, as we say. If I didn't have it, then it's in tonight's list as a plus R as well, because I can't see any reason not to add risk. Would I take profit here? Why would I take profit on that last candle? This is not a take profit candle. That's not even a take profit candle, and it's black. What is a take profit candle? That's getting warm, but it was never confirmed. That's starting to confirm that, but it's not that bad. Even that's not that bad. Like, there actually aren't any take profit candles in here. Like, where was the last clear take profit candle on FRS? Well, I can't even see it. Maybe there. And that's when we looked at it all the way back, where we said taking 2/3 off the table on that day. And then since the run started again, it actually hasn't given you any reason to minus R. And it's not giving me any tonight. Let's go to DTR. Actually, coincidentally, they both at one stage were running very hot. DTR came off the boil. FRS kept going. But this looks pretty interesting to me now. I think today's candle is important. Above average volume. It started down. A lot of things started down today with the news. And all we saw from there was steady buying. A bit of supply, obviously, because quite a few investors would have been shaken out today, but that supply was met with commensurate demand, more than commensurate demand. And giving us the double white candle there is I almost said always there, that's a stupid thing, is more often than not a very bullish sign. 2 white candles like that side by side. The only thing that would give me cause for the tiniest amount of concern is, a little bit of supply potentially lurking up here. There was some last time for whatever reason, and there could very well be some there again. But otherwise, this has turned the corner. This is still heading in the right direction. Double whites I've talked about. A nice push, volume push, we call it. So we get the nice big white candle, even a gap and run there. Isn't that wonderful? Gap and run, white candle, high close, and we call it the volume push. We're removing supply. There's interest, so increased interest. Yes, there's supply, but the supply got whacked. The supply ended up in cash by the end of it. The motivation is what speaks to us there. And, I think that's still pretty healthy. So I'm ditto on this one, which is plus R or equals R, and certainly no reason to minus R at this stage. A nice little segue into the next one from Michael, who asked had a very specific question about volume on this ETF. Now, first thing I'd say about ETFs and volume is that the volume is a little bit irrelevant on an ETF, because you got to remember ETFs are made up of dozens, sometimes hundreds of stocks. Sometimes they're often, or more often than not, market cap weighted. So you could have one stock that did something really interesting. It reported earnings, or it had a bad announcement or a good announcement, and that's where all the tradings come from. And maybe the volume is being spurred from that, not from something else. So first thing, volume and ETFs, you're struggling really to make heads or tail of them. There is still some basic element that if there's more volume, there's more likely to be something going on. So that's certainly granted. But we might take it with a little bit of pinch of salt. That's all. Okay. The other thing we'd like to note is that Michael was very specific and quite insistent that the volume meant something on this day. He mentioned that there was higher than average volume, etc., etc. But I would put, due to the larger than normal volume, larger than normal, higher than average, and I'd put to you that 97,000 shares on a $27 stock is not that much anyway. I wouldn't say there's just a resounding, emphatic movement of capital in here. So just keep that in mind also. They can be quite illiquid, these ETFs, and generally market-made instruments. Okay, so the point of Michael's question. So after what I've done there is laid a foundation for why volume is not that important on ETFs, and in particular this ETF. The question is, the stock had a smallish candle on that day, and there was higher than average volume. And does that not mean that there was a lot of supply, quote unquote, capping the price moving up? Does that not mean that there was a lot of supply capping the price moving up? So lots of volume possibly means lots of supply. Capping the price moving up. I don't think the price was so much capped, although I don't know because I can't go and interview anybody, but I can say very confidently that's a positive candle. It's white. It's not a huge one, but if we look at where it sort of is in relation to the previous one, it's made good progress. Like it's made, compared to this candle, it's made good progress. Actually, it's the progress it's making on this day is consistent to the 5 or 6 days that came beneath it. I'd call this more of a V-shaped rally than anything else. So no, I think the progress it's making, the fact it's closed on the high, there's not a gap there, but there is let's call it a space between the low and the previous close. So there is a positive vibe on the open that is maintained. This candle tells me that there is credible demand side motivation. So let's log that. Let's put a line under that and say there is credible because it's at least maintaining the pace of the previous ascent. The previous ascent is decent. It's quite V-shaped, okay, compared to the fall that came before it. So we are seeing credible demand side motivation. Let's log that. So is that a good thing or a bad thing? Is that a more often than not the price will continue to go up, or is that a more often than not the price will continue to go down? And for me, it's more often than not the price will continue to go up. So let's put that aside. We've got the price action. Now let's try and marry together the volume and the price action. And yes, you're quite correct to say that there is above average volume. How can we check? We can check here. Okay. We can say that, yes, there was lots of supply. Okay. But maybe, Michael, you're forgetting that there must have been also lots of demand. So there's lots of demand, taking out lots of supply, and we would use the word taking out there because of the candle. Okay. So lots of demand, clearing out lots of supply. Okay. Motivation is high. These are all things that sound good to me. Lots of demand, clearing out lots of supply, demand side motivation is high. Making good progress. So I can't find the negative in there. Okay. Now I have watched a video. It just came up on my YouTube feed. Okay. And they did put in this particular video, this idea that when you see something go up, has a small white body on high volume, this particular video said that it's an indication that the trend is stalling. Okay. And I have no opinion on that because who am I to say that they're right and they're wrong? I did watch the whole video and I didn't have a particularly high opinion of it because I don't think they really thought things out. I think they got a lot of things from textbooks where things aren't really thought through. I've given you my view on that candle, on what it means and what the volume means, and it's up to you now to decide who you want to believe. That's all I can say. Let's go to the next one, which is Mick. Now, Mick had these last week, but the only reason why I'm doing it again is because we lost last week's recording. So just in case Mick wasn't able to tune in live. Let me get rid of some of this stuff because we can't see what the analysis is. Okay, looks pretty good. I ran it tonight actually I don't think I ran it as a feature. No, they're the features, but it definitely got a plus R. Look, it wasn't far away from being a feature. there were just so many other like super, super hot feature charts. Mainly gold, obviously, gold and well, that's gold copper, isn't it? But look at this. I mean, let me just run through them. African gold. Hey, does anybody have African gold? Give me the thumbs up. I expect some of you would have it because it's been in Chart Watch about 56 million times. Perry has it. Good. It's only Perry. That's disappointing. I would. Has anybody traded it but got out too early? Going to have a showing of Colin's put his hand up. Oh, yes, Gavin's got out too early. Okay. I can't see, much like FRS, Gavin, I can't see many minus R candles on the screen there. So that's a shame, isn't it? Because our goal is to find African gold trades and to run them as far as possible. Gavin's crying. A1M is fairly new. It's a little bit more choppy, so that's I wouldn't expect many people to have been on that for a long time. This one I'm pretty sure, correct me if I'm wrong, I reckon I put it in on this day or that day. I can't remember. It looks kind of familiar there. Certainly I would have put it in on that day. So I wouldn't have a clue what this thing does. It's going up. I do know what this one does. So all guns blazing there, BHP. Just looking at those last candles so we can see how strong these last candles are. Generally, there's some volume showing on those as well, just supply removal, getting things going, interest, BSA, and DTR. And this one is more in from a variety of setups. You can see up to this point, we've got really continuations, don't we? So this is a bit more of a turnaround. So it might not be as strong as some of those other ones, but just getting that diversification in our setups. Oh, that one's magic. It's been in so many times. EVN. Some of you must have EVN. It's been in so many times. GMD. Just a magnificent end candle there. GNP. This is the one I thought about a little bit, only because the other ones are so good. But then I thought, you know what? If on any other day this would get in. Metals X. Amazing. I shouldn't brush past these. That's all of the resources in that one. RDX, again, maybe not as strong as some of those continuation setups, but it's in there to try and get that diversification in the setups. RSG, SHO. Anybody on Sports Hero? I think I've got a few. Somebody asked about it last week. Maybe not. Viking. I don't know what that does. I think that's new today. VMM has been in a few times. Robert might be on Superhero there. WIA. And Woolies. So that's the list of longs. Let me do the shorts because there's not many of those. Order date, I mean, I could not put it in at the end of the day. Cochlear, on a decent day for the market, it's the opposite candle there. They always catch my attention. That's a dead cat bounce, isn't it? I mean, that is the definition of a dead cat falling from a great height and just not bouncing. Data 3, EBR, Lend-Lease. Oh man, what a shocker Lend-Lease is. I'm so glad that none of you own Lend-Lease. I'm so glad that none of you own any of these shares. Maya, NEC, TYR, WJL, and XRF. Look, many of these are ASX 200 stocks. Many of them ASX 300. If you've got a super fund that's investing in the ASX 200 or 300 or all ordinaries, no doubt that super fund, if it's a balanced fund, permanently invested, and therefore by definition would own all of those stocks to some degree. And when you think about it, that should scare you. That should scare the absolute pants off you that type of investing still exists in this day and age, when we can see that really we could be our own fund managers. Let us move on to, in fact, we should move back, not on, to 4DX and just quickly say that for you, Mick, I like this. I can't see any reason why you wouldn't go plus R. Certainly equals R and minus R is off the table. We know, however, that there will be some supply up here. It's almost inevitable, isn't it, 4DX? But if we are entering around the present level, and today's the candle. Yesterday I did look at it long and hard on Friday for this morning, and I thought not. I thought just give me one more day. Just confirm that short-term uptrend ribbon is acting as dynamic demand to get me through this, right? It's almost completing the dink, if anything, and today I was happy enough. Now, if we are looking to enter around here, we know our first minus R area is here. Okay, so we go minus R, and if we look up, we need to have at least 1-to-1 into that zone. Now, I know I've drawn a bit of a box, but somewhere towards, you can go all the way up. Carl, how long should I draw that arrow? And you've heard me say many times, look, don't stress out about these things. Look, just is there one-to-one or not? Don't have to be so pedantic. And I learned a long time ago not to be so pedantic about things. Oh, Carl, you have to have an explicitly defined system so you can backtest it and all that stuff. You need to have an explicitly defined system to backtest. That is correct. And you would backtest something if you weren't sure that it worked. Let me just leave you with that thought. So we know that that's our downside. Potentially, we know that's our upside. We've got at least one-to-one, so we could take the trade. Let us keep moving to Weebit, which is not looking as good, unfortunately, Mick. I can't really see any reason to be on that one, to be honest. So I won't spend any more time on it. And I shouldn't have to explain why to anybody that's listening on a Monday night. This one does look good. Look, I reckon it went in for a plus R on that day. I think it went in for a plus R on that day as well. It wasn't in tonight because we didn't get a candle that justified it. But I don't think that candle is sinister enough to warrant a minus R at this stage. In fact, it's not even close, is it? So we've still got areas here that we could use to peg a minus R beneath, obviously, the short-term trend ribbon. This is a long way away, so we'd love to get a dink. The best thing that could happen here is a little dink, and then we could start to use that area as a minus R, because otherwise it's a long way away from here. But no, I can't see anything so sinister in that chart to warrant a minus R. I'm not a plus R, for obvious reasons. That last candle doesn't allow me to. But next demand side candle, I could certainly get back on board on this. It's just equals R for now. Okay, those are the offline requests. Let's head to your online requests. I've probably done a few of those in that whip around the grounds, just on the basis that we're all trend followers here. But let's have an extra look at VMM, which has come from Perry. Let me zoom that out. And obviously that was one of the plus R's. It was one of the feature charts. Let's zoom out first to just make sure there's nothing out there. In fact, look at that. That's October 2024. And if we draw that across and then head back to our daily chart, we can see today's candle. Wow, that's impressive. Just sliced straight through that. I mean, we saw a little bit on Friday, didn't we? We saw a little bit in this day, a little bit of a manifestation of that supply zone, but today it just cut straight through it like it wasn't there. And with an exemplary short-term uptrend. The short-term trend ribbon doing exactly what it's supposed to. The long-term trend ribbon very strong, and apart from a little blemish there, also pretty much doing what it's supposed to. Incredible candles. I can't fault this one. $3 isn't really a round number that I'm concerned about. 5 would be something I'd be more concerned about. Obviously nowhere near there. Plus we're above that long-term point of supply. So I'm just explaining to you why. I mean, volume, there's not a lot of supply there, is it? I mean, we've made a lot of progress here on a little bit of, on very average volume. So one way to interpret that, start with the candle. What is the candle telling you? There's credible motivation. There's great progress. It could have closed higher. I would have loved it if it did. We can see it's a substantial day. It's an important day. Go back to the volume. What is it? Is there any? And sometimes the volume's not telling us anything. It's just very average like that. We're seeing a reasonable amount of demand, take out a reasonable amount of supply. That was there in the past. Demand side 1. There's really nothing all that interesting going on in the volume, is there? So volume doesn't always have a huge amount of context every day. With what's happening here is far more important. So happy to keep moving. We will keep moving, but happy to plus R equals R on this one, and then I'll keep moving to the next one, which is from Michael, different Michael, 4DX, which we've discussed. John is saying, hi Carl, SIQ, let's have a look at that one. All for continuation setups. Yes, didn't make the list today. Not that I didn't see it, I definitely saw it, and I did skip past it, okay? Not because it's not good, it's just not good enough in my book. Let's head out here to the weekly chart and just see if there's anything sort of cooking out the back here. That could be a level. Just keep an eye on that one. Let's extend that across. And go back to the daily. So just to put into perspective, sort of 1040, 1060, and just changing that scale actually does, I can make it look really bad if I want to, and that's why we try and keep things very much default. What I was going to say there, it's very sideways. It's too sideways for me. So I totally respect this candle shows very decent motivation. This candle as well, demand side intent, downward pointing shadows into the short-term trend ribbon that has flipped from acting as a zone of dynamic supply. You can see it here perfectly like clockwork, and then flicking back here on the way back up. That's good to see. Long-term trend ribbon, yeah, look, I don't think this is the most liquid stock between you and me, Smartgroup, and therefore you can get slippages of these zones. But holding, everything's in place. We did see that big resistance zone, supply zone, excess supply zone upstairs. There's also one here. And, if I look up and I see a ceiling not that far away, I'm far less likely to want to fight the battle. I think that's what this one's all about, is fighting the battle here and then fighting the battle there. But you are doing it with some demand side intent. And actually some increasing interest. I can see increasing interest here. Carl, yes, volume. It has to be increasing interest. Like the volume on your stereo, if there is more shares being traded, it's more likely that there are more interested parties. It could be just the same people, but there's a strong likelihood there are more people becoming interested, certainly. But Carl, yes, you can see demand is increasing, but Carl, supply is also increasing. And that's why we shouldn't get so caught up on volume and analysing every candle, because it's demand and supply. So what this tells me is we've got increasing interest. That's a good thing. We've got great demand side intent. We've got good progress being made. These are all good things. But there is increasing supply into this move. Why is that the case? Okay, well, that makes sense. That's not a bad thing. It makes perfect sense that there is some supply in the system here. There are fund managers out there, for whatever reason, they don't like Smartgroup. How can you tell? Just look at the bloody chart. There are fund managers that clearly don't like this thing. Now, we know there are fund managers that do, and they're starting to win the battle, but they are trading. They are increasingly trading and increasingly removing those non-believers. That's what the volume is telling us. Okay, so I think we're okay there. Look, I could go plus R on this thing, but I won't. That's why I didn't run it, but I could if... if you're that way inclined. But I can see many reasons that this one's just too ho-hum for me. Sorry about that, John, if you think that's your favourite one. Now, definitely put APA on today. I think there's less of a battle to get through its supply zone. And I do know that once we get through this one, there's far less to contend with compared to SIQ. So if we go back here, we've got a little bit more of a fluid on the way down, fluid on the way up. You might peg, say, this, but even then, is it that much of a standout? Somewhere around here, maybe somewhere around here, though, and that one's a bit more obvious before we sort of run into trouble. But I think we're okay there. So yes, this did not make feature for very similar reasons to the other one, but at least it got it into the list as a plus R today. Nice candles here and here. Nice candles doing everything we want it to do at the long-term trend ribbon. Decent little volume push here. Not much today. Actually, there's not much supply, is there? There's actually not much supply in the system. We've still got motivation. Defer to the candle first and foremost, and then check the volume to see if there's if it's making sense. Happy with that one. Let's go to MKR. And looks decent. Yeah, look, this didn't come up in my list today. I'm not entirely sure. Certainly it's meeting the turnover filter there. Yeah, I'm not sure why it didn't come up. If it did come up, I would have probably would have put it in. I think it's this is a punt. It's a turnaround setup, and probably much like you are thinking, John. You are liking the fact that it is treating this now as an area of dynamic demand again. That nice little downward pointing shadow today, and then coming back up again. Pretty average here though, but average day. Demand side still won. Is there a great resumption of the interest through here? Not yet. But there's not a supply, clearly not a great deal of supply sort of impeding the progress either. So yeah, I could go plus R on this one, but it's a little bit of a specky one. Certainly I'm at equals R, certainly not at minus R. Let's go to EQR. Now this one made the list. It's about as perfect as you can get. I know it's gone up a lot. I know it's a long way from the light green ribbon. But it is just a wall of demand. Yes, there's a wall of supply, isn't it? So what is volume? Oh, you want your stocks to go up on high volume, do you? I'd be quite happy if that printed that candle, if I owned it, on next to no volume at all, because it would mean there's no supply. So what this means is there's a lot of traders. There's a lot of traders trading it. They got in at 28, they got out at 28.5, they got back in at 30.5, sold it at 30, 32. Then intraday it fell back to 30. They bought it at 30. They sold it at 30.5. They're making little bits of money as they go. We've all been there. We've all seen it happen. So, look, motivation is clear. At the end of the day, the demand side won the battle. I put to you that a substantial amount of supply went through today, but ultimately is regretting that decision. And there's no reason why this can't continue to go higher at this stage. But, lots of volume, lots of potential latent volatility, I guess, because there are lots of traders as well. Plus R for me, and equals R if you've got it. Very, very strong price action. That one was for Robert. Next one's also for Robert, TGN, which clearly doesn't look as strong as some of the other ones, doesn't it? It looks good, but it doesn't have that same sort of impetus. Tungsten Mining. We're obviously going to have a bit of a supply area in and around here. So draw that across. We're not far away from it. But look, it looks fine. I mean, if you were that way inclined, we need to do a bit of a battle here. Decent candle, very decent. I didn't see it today, or maybe I did. I can't recall. I'd have to do the scan again. But I'm pretty sure that if I did see it, I've just gone over it. I've just gone, look, given what else is out there, there are easier wins, I feel. But in isolation and looking at nothing else, yeah, I can see why you would do it. Just want to make sure, though, that, if you're getting around here and down here, down here, where's your exit point? Where are you comfortable to have an exit point? We may well be just struggling to make one-to-one. Certainly on this one, we would, the bigger one, and we'd have to be using only the short-term trend ribbon and no points of demand. So you're comfortable getting into something where your only protection is that short-term trend ribbon and no points of demand. So, as I said, in and of itself, certainly you can see a path to plus R. But when we really scrutinise this and start to compare it to some of the other ones, and then we start to say, what are we prepared to accept in terms of our risk management? Does it stand up? I do feel that this will be a substantial supply zone, only because it was a pretty decent reversal from there, like sudden, sharp, decent volume. There's a few people stuck in here just waiting to get out. They're praying that it gets back up there. That's all. And, that's our job, isn't it? That's our job, is to find the best of the best and stick with those. I think this is definitely one of the stronger ones. I'm quite certain I didn't shortlist it, but it definitely made the broader list. And I'll tell you why I didn't shortlist it. And it was very close, to be honest. It probably just needed a slightly higher close, a little bit of supply there. Look, in fact, I could well have shortlisted it. It's very strong. I can't fault it. I mean, today's candle is a solid demand side candle. It's a very shallow pullback overall. I mean, if that's the peak, and it might be this one, I can't tell, but it's either that one or that one. It's a very shallow pullback until the demand started to kick back in. It's kicking back in above that. Obviously, that's impeccable. In terms of setting credible demand, points of demand to potentially protect trade, we've got that one. We've got one that's relatively close. In terms of upside, I'm comparing to the last one, Tungsten Mining. All three of these have come from Robert. So, I challenge Robert. Have you compared them? Have you considered these three in combination or in competition with each other? That's starting to get pretty old. I'm not too worried about that. So no, as far as I'm concerned, there's no upside impediments, whereas with Tungsten Mining there is. So the two E ones that you've picked, Robert, EQR and EIQ, are impeccable. I cannot fault them. Okay, so they are compulsory for me. Plus R equals R. All I'm just going to do is just grab that one and copy it across. Clearly, the EQR is the strongest of the three. EIQ is very, very good as well. And then there's a significant gap, I feel, to TGN in terms of their quality. All right, let's keep moving. We've got Jackie saying, is there a case to do minus R on Woodside? This is a great case study. Is there a case of minus R on Woodside? And hopefully a few people are on it. I think I put it in, correct me if I'm wrong, I put it on that day as a plus R. I definitely put it on that day. I definitely put it on that day. I'm pretty sure I put it on that day. I'm pretty sure I put it on that day. And I definitely put it on that day. So hopefully we've got a few people that had a nice little surprise today. A few people doing some thumbs ups there. Let's get rid of those. No, I don't think so. I don't think there is. We're talking about this day here. And it's not the perfect day. We'd prefer if it was white. We'd prefer it was closing at the high. I bet you anything. If we zoom out, there's something here going on. Not really. I think that's all. I mean, I could draw it down to there if I wanted to be really, trying to curve fit. But just, size of that candle and then pushing that across. Not far though. Not far from where, that's the top of that box is where we know that was the explicit point of supply. And I've just gone that candle. There's always a zone. People start to sell in advance of that. So that's why we start here and then have a bit of a leeway down, based upon a candle or the high of the next candle, that sort of thing. So probably a little bit of that coming into play today. But no, the candle was not sufficient, in my opinion, to warrant it, because you have to remember that this candle has a gap in it. So it actually looks like this, right? So if we think about its true range, this is what this candle looks like. So let's go here, here, here. This is important, actually. You need to be able to visualize this. And somebody actually built this for me, didn't they? Somebody built this for me to look at the candles exactly like this. And they sent me the code, and I haven't got around to looking at it yet. I will look at it, I promise. And I'm sure it's not hard to build, just getting AI to do it. But just consider that this candle here is actually looking like this. Yes, it is. So this candle, I don't want you to see that. I don't want you to see that candle, because that looks pretty bad, doesn't it? That candle in isolation is not great. Upward pointing shadow, downward pointing shadow, indecision, black body, maybe supply just starting to win the day. I reckon that the supply component, which is from the top to the close, is slightly bigger than the demand component. just this in isolation doesn't look that great. It might give you cause for concern. But if we think about what really happened, this candle is not perfect either, because it could have closed all the way up here. Of course, it didn't, right? But it's far better. And I think, it certainly warrants sticking or giving it more of a more leeway. So equals R for me, but we're not plus R, are we? We're not plus R at this stage. And the rest of the trends are still good here. We're on a weekly chart. Why am I on a weekly chart? Fortunately, I'm going to get away with that because we've only got Monday. so I actually just got away with it. It's the same. Look, we're going to see it's exactly the same. Right, and we've lost the little shadow off the right-hand side of the screen. I can't get it back, but I can do that. There we go. Same. I think here that looks so much better, doesn't it, on the daily chart? And you would never consider that to be a minus R event if you saw that. Yeah. So let's just go equals R, but not plus R either, is it? Certainly not minus R. Okay, let's go to, but I think that's a great case study, Jackie. I'm so glad you asked it. Avant saying, Avant's note taker, not even Avant. See, Avant has transcended Monday night, ladies and gentlemen. He is too good for us. What we've got instead is Avant's AI. So Avant is somewhere else right now doing something far more interesting than hanging out with us. We've got Avant's note taker. Oh no, he didn't ask a question though. I see. That's what you need to do, Avant, is get your AI presence to actually ask the questions on your behalf and report back to you. Wouldn't that be good? Robert saying BHP to 100. Anything's possible. I don't know. Is it more likely to go to 50 or 100? Wouldn't have a clue. What I can say is right now there's excess demand in the system. There's nothing really interesting going on here apart from the fact that for some reason everybody wants to own BHP all of a sudden. Look at that massive clearing there. What is that, end of month candle perhaps? Let me get rid of some of this other stuff. I don't want to get rid of those. Go to the weekly. I mean, it's blue sky from here. It's a big range that it's broken out of, 40, 50, 40, 50, 40, 50. Okay, now we're at 60, anything's possible. All I can say is the candles look good. So happy to stick with that one officially. Equals R. And plus R as well. I'm pretty sure I ran this as a feature, as we saw before. Michael saying, I sold out of EVN around $3 and never got back in it. Why? I can't answer that, Michael. But let's have a look and see. That's not right. EVN. And I'm curious. I mean, certainly there's some black candles here. On this day here, we said plus R. On this day, what would we have said? Look, we know that's not a great candle, but I don't think anybody here would have panicked out on that day. It got our attention, and for all of us, the next day is far more important than that day. That day is important in that it gets our attention, and the next day either confirms something's up or confirms that there's nothing to worry about or that we need to give it even another day. So I don't think that's our smoking gun day. This is worse for me than that day, I guess, with the big upper shadows, like it's gapped down, tried to rally, really therefore solidifying this as a point of supply. And then the next day actually was pretty good, and that's pretty good. So there's really no cause to exit on that day. But Michael's saying he got out at $3. Holy moly. So I'm saying there's no real major reasons to sell it anywhere through. Like, it doesn't look good, but that's not emphatic. And then we're back up again. So I can't see any minus R's there. Correct me if I'm wrong. You can tell me. No minus R's here. So the first minus R's are coming sort of here, 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 and here. So they're, and potentially even back to zero risk here, back to flat. So that's it. So around that sort of $10 mark, I can see a reason to get out. But Michael, holy moly, you really got out early. You're really early. You're all the way over there. So yes, I cannot explain why you didn't get back in because there's been about a zillion chances. And thank you for sharing that with us because this is the challenge for us all, isn't it? And what is stopping us, ladies and gentlemen? What is stopping us from putting a grand total? Now, let's say I had $100,000 to invest. $100,000. What is stopping us from putting $100 on Evolution, Michael? $500. What is like something so insignificant? Like, what is stopping us from just putting a bit of money on something that's going really well and just seeing what it can do for us? If you've got out $3 and now it's $6, I can't buy it back now. If I buy it back now, if you're not, just put some on. If it's going gangbusters, put some on it. Let's go to VKA. This is Robert VKA. Bought yesterday. Oh, good for your tungsten portfolio. Tungsten portfolio. Why, Robert? Shame on you for knowing what these companies do. Shame on you. Tungsten portfolio. Okay. Yes, very happy with it. Yesterday looked very good. Maybe an upper shadow might have kept me out, or maybe the fact that I suspect it didn't meet my. No, it did meet my turnover filter. I don't know why I didn't see it on Friday, or maybe I did and I didn't like the upper shadow. I doubt it. I don't know, or maybe did I put it in Friday? I can't recall. I'll have to go back and check. But it just didn't ring a bell when I saw it today. So find VKA. Oh, it did. I did. There you go. I did put it in on Friday. There you go. I put it in on Friday. So I'm guessing, Robert, maybe that's why you added it to your portfolio. So how about that? All right. So I did put it in. I just didn't remember I did. It's still what we saw. It's in the feature trades today. Perry's got some US stocks. We'll do those very, very soon. I'm checking the time. In fact, we need to really move along. So don't put any more in because I won't get to them. Okay, US ones to do. CTM was in. I'm just going to pick up the pace. Horaju CTM was in. It didn't make feature, although it was very strong. It just felt a little bit choppy and a little bit of history. Let me say it again, a little bit choppy. Like, where's the total consensus here? Is this confident consensus, or is this a bit choppy? Not sure. I don't want not sure. Maybe could do with a bit more interest. Hey, it could take off tomorrow. So certainly plus R, not a problem. Was it the best one out there? I'm not so sure. BSA definitely made the list, though. So Michael was CTM, Horaju, if I misspoke and I put them in the wrong order, apologise. Haraju's BSA, and that looks amazing. 100%. Yes. The turnaround as well, I love. So this could actually be my favourite chart today. Michael, is it okay to be FRP on the old tin pot if you're practically only invested in materials? Yes, I addressed that at the start. Maybe you asked the question before I addressed it, but just understanding that you are very concentrated, in those sectors by default. Yes, you're 100% invested, but you're 100% invested in gold, tungsten, and whatever's tungsten's best friend at this point in time. And we said whatever the themes are that are driving this at the moment, if they were to reverse, and as we made a bit of a joke how unlikely that might be, but it could happen. You could see a big drawdown. So we've got Avant saying, please look at A2 Milk, which definitely made the regular list today. And we can see some old supply here. Let me zoom out. In fact, it's a little bit of a decent zone there, from the weekly chart. So that's important because we've actually cracked it. I mean, look at how many tests. What a wonderful chart. What a wonderful case study for how historical supply tends to continue to act as supply. And even better, to prove my point about round numbers. But I think all of those small-minded people that cannot imagine A2 Milk being more than $10, who have just so stupidly pegged that value on it, all the fundamental analyst nerds that will swear black and blue that A2 Milk is a $10 stock. Like I did my maths. My maths is better than everybody else's maths, and I reckon it's worth $10. And yet there are other fund managers out there that clearly think it's worth a lot more. And once we've cleaned out those narrow-minded people who think it's only worth 10, and we're left with the people who think it'd be worth more, we can be in a supply vacuum. So yes, that's a plus R and equals R. And if there's anything I hope that I give to you through these sessions, it is this idea of not having an opinion. Is this idea of not believing that you know better than the market, that your opinion matters, that you matter. I know your mother told you you're a beautiful, delicate little snowflake and your opinion matters. And you go out there and you tell the world what your opinion is. But when it comes to the market, ladies and gentlemen, hopefully I've taught you one thing of value, is that you are irrelevant. You are dust. You are less than a speck of dust. So never, never, ever forget that. Never think that your idea is right, because the market will make you look very, very stupid very quickly. And the whole field of fundamental analysis is about being right, is it not? It's about putting my opinion and my expertise, my ability to define value and define it to the world, and I will be right. And yet what we do, trend following, is the total opposite. It is the total, utter deferral to price, to demand and supply, the most basic tenets of economics, and totally accepting that we cannot control those, and we are price takers and we get whatever we're given, and we're happy with that. Let's go to some US ones there, and I think we're going to head back up. Michael's saying you didn't get back to EVN because you traded other ones. You should have still bought some EVN, Michael, I reckon. Okay, let's go to the trading view screen. We'll finish your North American plays. And I say North American because Peter's got Canadian here, AGMR. Silver Mountain Resources, double checking that is a daily chart. That looks good. I like it. It's a turnaround setup. It's done its time in the long-term trend ribbon. I like this candle and this candle. I like the fact that it's dinked, a very bullish dink. Intraday pullback, intraday here, boom, up we go. No volume, so to speak, which is interesting. I mean, there is some volume that preceded it, so there is some interest, again, marrying together what is volume telling us with the price action. There is some interest that's come in. We didn't get a lot of volume on that move, so some people might say, well, that's not good. There's no interest. Well, we've had some interest. Are you going to maintain the same interest every day? Not necessarily. But what did the demand side say? They voted very cleanly, very clearly. There's lots of motivation. There just wasn't any supply. So tell me where it's bad. Okay, well, Carl, when I didn't go up with any volume, it's bad. It went up. There was no volume, there was no supply, there was lots of motivated buying. Tell me how that's bad. No, that's good. So I'm plus R equals R there. Equals R. And let's go, I'll save that one, and then we'll go RYO, which I'm guessing is another gold stock. Oh, it's another silver stock. Zoom that to default. Looks fine there. Just want to double check there's nothing sort of sinister. No, nothing sinister at all out there. So I'm liking this. A bit more of a continuation play, but off a nice base. Looks good. Can't fault it. Pretty happy with it. And let's look at this demand side motivation. Closing at its high. String of white candles. Pervasive buy orders. Bit of volume in here. Is that good or bad? It just is. There's interest. Yes, there's some interest, but there's some interest before. We always want interest. We love interest. A bit of supply. So yes, is this supply that's lurking in the system? Well, if it is, and I totally accept that there was lots of supply, but where's their motivation? Where's the supply side's motivation? It just wasn't there. So is it bad? No, it's not. Was there lots of supply? Yes, there was. Okay. Is that bad? I don't think so. I don't think it is. Should it stop us from trading? I don't think it should. So it's just accepting. So this is maybe this is the point I was trying to make before, because some people say, oh, look, it has a small candle, lots of volume. It encountered lots of selling. Yes, it did, but it also encountered lots of buying. It closed on its high. There's probably lots of traders. So who do you want? You have to decide who you want to believe. So my point is, I look at that and I say the price action is the most important. The volume can give us some really handy clues. Okay? It tells us there's lots of interest. That's a tick. It tells us there's lots of supply. Yes, I accept that. And that's not always a tick. but it wasn't supply that had any control. Okay, so if you want to mark this down or mark this up, I don't even know anymore, right? But for me, I don't see anything so sinister in there. I'm trying to get back to different Michael's question. I don't know if have I answered that. I think yes. Have you understood? Has anybody understood? Thumbs down if you haven't understood. I'll have another go at it next week. This week I'm too tired. A few people got it. The point is, don't just believe what you read in the textbook. Analyze it bit by bit by bit. Yes, there's lots of supply. We get it, but who won the battle? Who won the battle? And as long as the demand side's winning the battle, it's okay. If you see lots of supply, yes, there's still lots of demand. But if you see the supply side won the battle with a big black candle, now that's starting to mean something. Let us go to. It's important because we're lucky we have volume. If you're trading FX and some commodities and some indices, you don't have it. So I think we're so blessed as share traders to have this volume, and it's one of the most misunderstood things out there because people forget that there's a buyer and a seller to each side. It can help us greatly, but it can also confuse us as well. Let's go to SKE, Skeena Resources, which looks exemplary. I mean, I can't fault this. It is the perfect chart. Equals R plus R all over it. There's nothing I don't like about it. Let me just double check out the back here. And no, I like that even more. So this is sheer perfection and very, very happy to add risk on that one. All three gold/resources stocks. Not a surprise there. Okay, heading back up the list, and we're going to go to Perry's US stocks this time. So heading from Canada, from Australia to Canada, Canada to North America. Perry is just giving us one he's given us before, which is fine. We love that because it's still going up beautifully, isn't it? And we love when we just do copy and paste. It looked good then. It looked good now. It doesn't look any better or any worse, does it? Ergo, it's still good. Happy with that one. I won't look out the corner of our eye because I'm sure we did that last time. And very happy to look at the same one next week and the week after when they're that good. Let's go to CTVA, which making sure, yes, CTVA, I've typed it in right. Bit of a spinning circle there. Oh, we've got it. Corteva. Oh, I love the just like that exponential, that exponential curve to it. Let's go here. Let's go here. Yeah, it's just exemplary. And head back. We did have a little plus 130, didn't we? And went up and probably getting out around here. Oh well, not much to do all this time. Here I think is the plus R. Maybe here. Oh, in fact, certainly here. Maybe there. Certainly there. Certainly there. Certainly there. Certainly there. And certainly here. All plus R's for me. So it's one where you can see you're just adding a little bit of risk each day as the story grows, and hopefully it continues to grow. Let's go to MCD. I know what this one does. You'll all know what this one does. McDonald's, very defensive stock. The other type of stock that does well at times of war, as perverse as that sounds, are defensive stocks like McDonald's. And that is breaking out. It's a little bit more choppy because when there's no need to play defense, defensive stocks pretty much do this, don't they? They can be pretty darn boring. Nice big base breakout here. Just the only thing I'd say is just beware, the leopard doesn't change its spots all that often. And in this case, we're talking about the leopard's candlesticks, or we should say the zebra doesn't change its black and white stripes. But no, for now, certainly, unequivocally, plus R equals R. ALM is the next one. Oh, is this our Almonty Industries? Is this Perry? Please put me out of my misery. Almonty Industries, ASX. Is this the one and the same? Perry, tell me. Because as you know, it is indeed. Aha. Okay. So now things are making sense to me, because you all know, how many people have this one? Because I started running it. Robert's got it, good. And it did, there was a little period here where you might have got out, but hopefully you got back in. And holy moly, has that been an absolute ripper. And it's just been in my list so many times. and I don't know what they do, nor I don't want to check, because I feel if I check, it'll finally find the top. So blissfully ignorant of what they do. And then Perry surprises me with this, that it's actually an American company, and we've got, I'm guessing, ADRs traded over there, or some element of it traded over here. There you go. Well, that is a ripper. I guess you could trade it here or there. Plus R equals R. Wonderful. And let's go to, I've just lost my spot here because I had to scroll down, that's why. And I found Perry again, and that's all of Perry's. Thank you, Perry. Let's head back up. I think we're going to finish with Adonis, as we traditionally do. No, we've got Robert in between. Back to Canada here. So we've got American tungsten. Another tungsten stock. I reckon this is my favourite tungsten chart, actually. This looks really good. Nice little turnaround setup. Long way to here. $5, obviously. You know, it makes sense that that's $5. This looks really neat, actually. I don't mind this. It's one of those ones where you have no choice but to know what they're doing, because what they do is in the name. That's a really neat chart. That's one of my favourite charts today. So let's go save that one. Thank you for that, Robert. I think that was, yes, Robert. And Robert's got a few more for us here. AFM. Is that it? CS? Oh, you've got wait a second. So let me read your thing. So you've got TSXV. Okay. Yes, I don't like it as much as some of the other ones, just because, like, remember what I said about the zebra and its stripes? Like, there's a bit of confusion going on here. Definitely worked it out. Big push. Seems to have dispelled the confusion, but will it revert? I don't think so. No, look, it's through everything there. So no, happy with this one. Yep, happy with this. It's definitely up there. No, I don't need to be concerned about what happened here. I don't think. I think it's fine. So let's put that back over here. Click save, and we're going to go to AYA. These are all Canadian stocks, if you're wondering. AYA Gold. Yeah, look, very strong. Absolute yes. Obviously, there's a little level here, but I feel it's dealt with it. I feel Friday's close suggests it's dealt with. So we're okay. And if we zoom that out, what do we get? No, fine there. Happy days. All good. So let's go plus R. Yep. No problems there at all. Equals R. There are others we've seen that don't have to deal with this. They're already through. And we've got some great ideas today. Fantastic sharing. Well done, everybody. Let's finish off with Adonis. FTI. Is this our? We've got an FTI now with different FTI from us. Looks very good. Friday's candle doesn't mean we're desperate for a plus R, given we've seen so many other ones. But if you did plus R, even on Friday's candle, because everything else is so perfect, everything else is 10 out of 10. So that would make it 9.9, right? So do you not take a 9.9? No, of course you do. So happy, even though Friday's candle isn't perfect, you could wait for another white candle if you wanted to. Of course you could. But happy with that one, and that is a very, very strong and steady trend. I love these low volatility trends because they're the ones that just tend to keep going and going. Click save. Good. Let's go to AROC, and we've got 3 more after this. In fact, we've only got 2 more because we've done McDonald's. A little bit of supply, maybe not as much urgency in those last couple of candles as some of the other ones, but otherwise that weekly chart is impeccable. Again, those candles are bringing it down to a 9.5, I think, in this case, and this 9.5 is better than probably 95% of the Aussie stocks we saw today. So it's very strong. Certainly, I'm going to go equals R. Just give me one more candle, plus R on next high close. Just give me a high close of any type. Let's go to AM. which is Antero Midstream Corporation. That one's high enough close, so I don't think that's got the same issues as the last one, and the weekly chart is just as impeccable. And it goes to show, once again, that we've got a benchmark that might not be the right benchmark at this point in time. And most of the time, much like my microphone works 49 times out of 50, plug and play, I don't have to check it and I'll be fine. That one time, it doesn't work. So 2% of the time it does work. 2% of the time, maybe the Nasdaq Composite isn't our best benchmark. Okay, but generally it's the most risk on market, and it tends to be the case. Because all we're seeing here, ladies and gentlemen, in North America is risk, isn't it? Is happy risk taking. And there's Coca-Cola. We talked about McDonald's. This one's much cleaner than McDonald's, substantially cleaner. And therefore, this is the one I'd probably err towards. Now, it's still a big base pattern. You can see how defensives can trade, sideways for no reason, and then a war breaks out and they go up. So happy with that one. Plus R equals R. Coca-Cola and McDonald's, hey, what a great couple to get in a session. That's it for us this evening, ladies and gentlemen. Can I just remind everybody that the information we've discussed is general. Please consider it carefully. Seek the help of a financial professional if you need to. It's always you who's responsible for the stuff you do and not I. Apart from that, obviously, it's been a pleasure chatting with you this evening. I'm quite certain the recording's going to work. I'll get the timestamps done and I'll send that to you very, very shortly. All the best. Until we catch up again, bye-bye for now.